G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 7th of November. Yep, it is the 7th. I had to check then. I got a bit confused. 6th of November, still in the States where the midterm election is on, and a really important day for markets. Clearly, from the S&P, NASDAQ and Dow's rally, the market has decided that there's nothing to fear in the election, though if it is a blue wave, a Democratic clean sweep of the House and the Senate, as unlikely as that is, it could put markets and the US dollar under a little bit of pressure when the results start to filter out over the course of the trading day in Asia and in Europe, and then we'll have to see what happens. Of course, if it's the opposite, if it's a red wave, if I could call it that, if the GOP manages to hold both the House and the Senate, then that's probably good for stocks. It's probably good for the US dollar on the basis that the Trump agenda, if I could call it that, won't have any hiccups, or no more hiccups than it's already had. They weren't able to turn over Obamacare, those kind of things. So it's not been universally easy for the president or his advisors to get everything through, but from a stimulus point of view, they have been quite effective. So that seems to be the way that stocks were voted anyway. The S&P was up 0.6%. So basically between 0.6 and 0.75 for the S&P, the Dow, and the NASDAQ 100. So some good runs there. The VIX was down naturally as a result of that. US 10 years were up a little bit. They're at 22. The twos are at 93. So we've got that Fed meeting this week. There's nothing going to happen there, but what the statement says is going to be really interesting. And speaking of central banks, we had yesterday quite an aggressive, quite upbeat look from the RBA. That's given some support to the Aussie dollar in the sense that the RBA is more likely to hike than cut on its own basis. I still think the next move is probably 60-40 or 70-30 in favour of a cut. They're not going to want to do that. When they change their mind, they'll change their mind, but they don't seem to want to change their mind at the moment, if that makes any sense. Anyway, so the Aussie is up at 72.38. Sterling was the big mover, though. It fell on the DUP, saying we're going for the hard Brexit, but then it rose when Dominic Raab gave the two thumbs up to a journo after the cabinet meeting. It seems to me that, having said a few months back that the Brexit issues were intractable, that both the UK government and the EU have figured out that there are too many losers from a no-deal hard Brexit. It's not just the Republic of Ireland and that border. It's business, it's uncertainty, it's just, it's German industry. German industry, jobs in Germany. Germany and the UK have a massive trading relationship. Anyway, so a deal does look like it's going to get done. The question is, can it get through the comments? Anyway, we'll see. 255. Gold was lower. Oil collapsed. Continues to collapse. 59 to $60 looks like where it's going to pull up for WTI. Let's dive straight in. I'm going to start with euro, so we'll do currencies, then we'll do commodities, then we'll do stocks, and then we'll swing around to Bitcoin. Or actually, we won't. 6,400. There it is. As again. Right, so let me find my euro chart. There we go. Here we are. Right, so you can see it's trying to walk its way out. So it's not been a big or a strong move or pulse. It was obviously last week, but since then it's kind of stalled. It's still at 114.20. It's still below that 114.30 and certainly below last week's high. It could easily rally to my 30 EMA 114.70 and still not go higher, but it does look like it's trying to build. But this time tomorrow, if it's a red wave, it could be back down 50 or 100 points. If it's a blue wave, it could be up 50 or 100 points. So there's a lot of, there are times I love to play options. All right, so MT4 brokers for the most part don't offer options, but options for me are a fantastic way to play the spot. You can play the convexity on the option if you get it right, all those kind of things. So if you're able to play options, these are the times. And yes, you pay a lot of money for volatility, right? But if you get the move right, the volatility reflects the chance of you getting the move, also of getting it wrong. But so for me, if you think about the vol, the theta, which is time, and the convexity, you buy it at 30, sell it at 70, kind of convexity moves in terms of the delta, then you can make a lot of money. So now's the time for me. Now's the time where if I was still a wholesale investor, still a fund manager, I'd be playing options. It just seems to me the safer bet. Anyway, it does look like it's building. If we remember the weekly, the weekly's got some support down there. As long as it holds above 112, sort of 75, 80, it looks all right. Anyway, so it does look like it's going to build, but it's going to depend on what happens. Now, dollar yen is higher. Dollar yen keeps moving higher with stocks. I've taken off that thing. We've got a double bottom here. Some people might say, might. If we draw kind of that through there, maybe that's the level to watch. I was reading Schumacher's book yesterday about Head and Shoulders, and when you've only got a hammer, everything looks like a nail. So, but if that could be a shoulder, that could be a head, and look at that volume spike on that head. If that's a shoulder there, then a break of this is I'm talking about an inverse Head and Shoulders. Then a break of 113.60 could really kick it on. That could be the thing that gets us that next 90 or 100 odd points for dollar yen. But as stocks rally, but of course, again, a lot of that is going to depend on what happens with the election. Anyway, so Sterling's trying to go higher. If there is a deal done, 133 trades and then 137 trades probably in time. So we'll see how that goes. Certainly. Any weakness is likely to be supported in the current environment. We've just got to wait for the toing and froing. There's not much else I can really say about that one. In terms of the Aussie dollar, I kind of rage against the RBA, but I don't mean to, because they have done a great job over a very, very long time. And so to that extent, I've got to respect them for that, and I do. My issue now is, as a behavioural guy, is whether or not they are underweighting the potential wealth effect. I think they are. But forgetting all of that, right? This is the so we had a lower low than that one, but the MACD, so the what do you call it? Moving averages didn't expand. So the momentum was already lacking when we made that new low, and we've had that nice bounce. It does still look like 74.40 is the target. I would desperately love to see a move back to 71.5 to buy. We are about, for the first time in, when's that? Back in June, we've got a crossover in my medium-term moving averages. So that's a really bullish sign. 74.40 is my target. I want to buy on any dip on that one. In terms of dollar CAD, really strong correlation between dollar CAD and oil. Oil collapsed down over 2% in WTI terms. We're still clinging to this trend line. Where dollar CAD goes is really about the election. So is everything else. You're going to get sick of hearing this. 131.70 breaks. We've got 133. That would have to be a red wave. A blue wave, I'd probably say 129.75 is going to trade. And a Kiwi, last but not least, I've missed the unemployment. I was on the phone with a potential client, on a call this morning. So I've missed the unemployment. I assume they must have been half decent. We're up here at 67. 67. I haven't even looked at the Kiwi this morning. So it was only a couple of days ago I was saying that we're going to head back up towards 68, and here we are. So I assume we had a decent number before the 9 o'clock rollover. Cross here too. First time since gee whiz. First time that's crossed since April. So this could be a big move. Blue wave, folks. Aussie and Euro and Kiwi suggest we might get a blue wave. Anyway, let's see. Gold. Stuck is the best thing I can say about gold. If stocks are rising, gold can't rally. There's a really strong relationship between gold. Remember this thing I do every week. Part of what I do is that I look at the relationship between different cross assets. And as at last Saturday, the 35-day correlation, so 7 weeks, correlation between gold and, say, the S&P 500 is 86.6. Between the only one that it didn't have a high correlation with was China. But China itself doesn't have a high correlation necessarily with the other stocks, whereas the S&P, the Dow, the Nasdaq, the DAX, all those kind of things, the SPY have sort of high 80s, mid 90s relationships in terms of correlations, directional correlations. With the S&P, the China A50 is only 50%. So gold and stocks. Gold can't rally if stocks are rallying. So keep an eye on that one. I've forgotten silver the last couple of days. More volatility. Basically we're in a box. I'm just going to call that a big Davis box. We'll take that and put it over there. I'm going to take that and I'm going to put it basically there. And I'm just going to call it a box. So nothing there. If 15 breaks, I get really super bullish. Copper's off again. That Friday night move was madness. There's lots of talk now. Now, this is something to think about. So there is a lot of talk right now about the outlook for commodities and the underinvestment in commodities. Obviously, people are talking their book in the same way short sellers talk their book when they put out their publications. Industry, some parts of it are talking their book about, or traders, I should say, about supply constraints because of underinvestment. So keep an eye on that. Keep an eye on that. One thing worth noting, and I've written this in Markets Morning this morning. Markets Morning this morning is not as long or as involved as usual. It crashed on me twice. Anyway, one thing I did highlight was the JP Morgan composite PMIs for the globe. They're at 53 in aggregate for the whole globe. That's not terrible, and that's off the 2-year low. What it tells you is if President Xi and President Trump can actually do a deal, the global backdrop is not that bad. If President Xi and President Trump can do a deal, then what have we got? We have got the preconditions for an EM rally, an Aussie dollar rally, a copper rally, all those kind of things. Sorry about that. I know the camera's flapping about a bit. But anyway, at the moment, we're in a range. 255, 286.5, 30 cents, massive range. Anyway, WTI is collapsing. All right, 61.73 now. Another massive build on API data. Will we see another one tonight for EIA data? If that was the other way, if I could invert that and turn it upside down, we'd be saying that's really vertical. We need to be careful. We haven't seen the turn, but we need to be careful. I'm not expecting it. Like 60.61 was where I looked, was where I expected. Originally, we talked about 64.5, then we talked about 60. I'm going to stick with that. All right. If it was me, I'd be scaling out. I know that seems silly. It means I've got to get a large number right all the time. But if you watch this show, then you know that I do. So that's just the way that I trade. It helps me sleep at night, all that kind of stuff. I hate giving back on wins. Anyway, so what have we got? We've got the break of 64.50, and then we've got 59.76. So between 60 and 61, I'm happy with. All right. So we'll see how that goes. EIA tonight. Brent is also falling. It's getting closer. Remember the original, we had this and then I talked about $70. We're getting close. We're getting close. So for me, that means we could be getting near the end of this move. We'll have to wait and see. The JMMC meets this week. Perhaps they'll come out with something a little bit sort of bearish from a supply point of view. Right, here we are. We're almost there. The S&P has almost broken out. Now, you know the way I use the MACD? That would naturally bias this higher. If we can get through 2774, 2814. If you get through that fractal there, 2823, then we could rock it. A lot of wood to chop. A lot of wood to chop. But we did have these volume spikes, didn't we? We had these, these volume spikes at the same time as we had these lows. Now I know, this is still the old AxiTrader stuff. I know, and using MT4 data. I know this is not the whole world and that kind of stuff, but the volume spikes are indicative of money coming into the market. A really important part of the toolkit. I haven't used them, but Ivan Delgado actually has convinced me to get back to them. I love volume. As an old futures trader, I love volume. So what do we got? We've got 2774 for me as the key level to watch. If you can get through there, it can run. Nasdaq 100, it's still a little bit confused, but the same sort of shape. You'd have to get down through 6856 for me to get bearish again, but I want to see it above 7158 before I get bullish. So we'll see how that goes. In terms of the local market, we're still trapped as well. Inside this range, just 57.68, 58.79. As the data flows today, so will the SPY react. We'll see how blue wave, red wave, or the status quo, not status quo, the consensus forecast, which is for a Democrat House and Republican Senate. That's the most likely scenario based on the numbers. 11.7 still hasn't got through. 11.3 is support. You can see it there across there. So basically, you've got 11 sort of 350, call it, to 11.750, 200. Good counting, Greg. 400-point range as your key. That's about it. Last thing I want to just quickly is Bitcoin. If I can find my Bitcoin chart. Look at that, 0. Like we can drill right in. It's going nowhere. You got to trade it on the 4 hours. That's a good sign. That is a good thing for it long term. It does mean that there's less interest, but traders are traders. Traders move from market to market. And so there's lots of other things to trade at the moment, isn't there? Plenty of volatility in more mature markets like the S&P. Then so you don't need to trade Bitcoin. So I think that's been a really important thing. Anyway, that's it from me. On behalf of myself, I want to wish you all the best. Kiwi or RBNZ decision tomorrow morning. Watch the data out tonight. The Fed is Thursday night, and so we're going to have plenty to talk about as we head through the week. So I'll catch you later. Bye for now.